Our next speaker is Dino Champagne. Dino is Vice President and Division Manager of Asset Preservation, Inc., API, with over 17 years experience in the qualified intermediary industry, serving SoCal. Prior to joining API, she spent 14 years as a commercial real estate broker handling sales and lease negotiations, and 15 years with a major bank as an assistant vice president and commercial lending officer. Dino, welcome.
Thank you. It's the last time I spoke actually in public was March 12th, just before we had the shutdown. And I was laughing at Aaron's email last night because everything we've been doing has been on Zoom, Ring Central, whatever. So everybody's pretty much, looking professional from the waist up. So he made a comment. So he put in the email, please make sure you dress appropriately because you will be on camera. Anyway, 2020 has been a very, very interesting year. I was telling some friends the other day, I said, if 2020 was ever put into a time capsule, please, please, no one ever dig that one up, okay? Don't dig it up at all. All right, so this morning I'm going to talk a little about what's happening in the 1031 space and what potentially could happen depending on the outcome of the election. So what we know at this point is Joe Biden had come out with a plan several months ago about his tax proposal. You just heard Amanda and Matt talk about some of the proposals that were coming out and things maybe that would come into play. A part of that, in the tax plan, there were 1031 exchanges. So a part of his plan is the possibility of eliminating, if not eliminating, limiting the use of 1031s. Now, the purpose to use 1031s or potentially eliminate it is to pay for what they're going to, another program that they're participating in or may potentially have, which is the Child and Elderly Care program. So they're thinking in this plan that they put together, they're thinking that this will garner about $775 billion of revenue over a 10-year period to help pay for the child care and elderly program. So as an industry, this is not new to us. So we've been through this before. I was on a call not too long ago and a gentleman made the statement, says 1031s is not a political party. Okay, so the political party it's neutral. Both parties have actually talked about the possibility of either eliminating or restricting 1031s. As an industry, we're taking a lead on this very early on. So when we saw the plan, we decided as an industry to go out and start educating members and staffers of the Senate Finance Committee along with the House Ways and Means Committee to re-educate and explain what the benefits of 1031s are. So we're out there on the Hill. Now, the Federation of Exchange Accommodators, which is our trade group as qualified intermediaries, is also being helped by other groups like NAR, NAREIT, ADISA, IPA, basically the alphabet soup of real estate. So we're going out there and we're trying to educate to say that this is a very, very important plan because it continues to help people throughout. It's what they found out over the course of time is that when they look at these programs, they look at them as what they call pay-fors. In 2018, under the Tax Cuts and Jobs Act, 1031s were a part of that as well. We were able to keep the 1031s for real property, but they ended up losing, so the personal property side of exchanges was eliminated through the Tax Cuts and Jobs Act. What they ended up finding out over the course of time, that actually a lot of revenue is generated through 1031s. If you stop and think about a 1031 transaction, you have so many players. You have the accountants that are going to be advising as to whether they should do or need to do a 1031. You have the qualified intermediary that's processing the 1031, paying all the staff. You have lenders, you have appraisers, you have inspectors, escrow, title. So there's a lot of revenue that's generated off of the 1031. So we're bringing this to the forefront so people understand that 1031s is a valuable part. And more importantly, in 2021, 1031s will actually turn 100 years old. So let's hope we get to our centennial birthday and 1031s will be remaining. Now, a lot depends, as Amanda and Matt mentioned earlier, the outcome of the election. Right now, we have no definitive winner for the president at this point, and there's still some determination as to who's going to control the Senate. The House is pretty much staying Democrat. The Senate right now is still Republican, but there's a runoff race in Georgia where there's 2 senators, and it depends, and that's going to happen on January 5th. So we'll know basically on January 5th whether the Republicans maintain control of the Senate or whether we end up with a 50-50 Senate, and time will tell on that one. So if the Senate remains, then, as they mentioned earlier, it may not be as easy to get these giant tax reforms through. So what do we know? We just have to wait and see like everyone else. Now, the next thing that we've experienced, obviously, in 2020 has been the coronavirus, COVID. In the exchange market, we had some interesting things that came out. We were tooling along very nicely, January, February, and then here comes March. March, and then we had the lockdown. Transactions were still flowing through the pipe as normal, but then there was a huge plummet. When I say huge in our industry, it was probably about 40%. We saw a drop and decline in volume of business, all right? No one was sure what was going to happen with this whole pandemic issue. May started ticking up, and then the market just started going in, for residential predominantly, started going up, 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 and up. So our market, as Bruce mentioned earlier, you have to scratch your head as to the why, but the 1031 volume has been quite robust since June all the way through now. So I can't give you the why to it, but it is. One of the issues that came up when there was the giant lockdown and people were engaged in exchanges was, are we going to get any extensions because you couldn't go out and visit properties? You were limited to what you could do. We were locked down. So how can you transact during that particular period? So it wasn't until April 9th that we received under IRS Notice 2020-23 that there was extensions that were given to the 1031 for the 45 and the 180 days. So basically what they ended up doing was extending those periods through up to July 15th of 2020. Now, right now, there are no further extensions. I still get the question from every now and then, well, we're still, potentially with another lockdown, we still can't get into certain things, or are we going to have any additional extensions? At this time, there are no additional extensions. Now, let's talk about how COVID has basically impacted the commercial real estate. I'm just going to cover this pretty quickly. Is that the volume for commercial real estate, I'm talking about shopping centers, office buildings, industrial, basically dropped, all right? Financing became extremely difficult for commercial transactions during that period. In fact, there were people that were in the middle of transacting on the 1031 side that all of a sudden on the commercial side, lenders were not funding. So that was a difficult period. What are you going to do? You're trying to buy property and your loan's no longer available. That can be extremely challenging. If you're the seller or, trying to sell to a buyer that can't get financing, or if you're on the other side of the exchange where you're the buyer and you can't get the financing, those issues were very, very real. Another thing that we saw too is there were people that decided to sit on the sideline. They had their properties for sale. They go, we're not going to do an exchange right now. We're going to go ahead and cash out. We're going to pay the tax, right now, and we're going to see what happens. And basically protecting themselves for what any downturn might come. If you have retail shopping centers, huge downturns because a lot of the shops were shut down. So that's what we saw in the commercial market. Residential was very, very different. That market became very robust. Again, can't explain the why, all right, but what we do is just do the transactions. But there's low inventory, not a lot of property on the market for sale. So if you're in the middle of trying to do an exchange and you need replacement property and you're buying residential income property, your inventory levels, it's going to be hard to find the properties. The demand is so high, supply is down. Also seeing that people are when they're making offers, they better make them fast because properties are not staying on the market very long. I think the national average was less than a month. So this is what we see right now in the 1031 side. So residential has been very, very strong, very strong. Now, Other trends that we're seeing with the 1031, because of the COVID, and I believe Bruce had mentioned this earlier, people are going from high density areas and they're going into more suburban areas. They're getting out of the high density, going into the suburbs. All right, so investors are doing that as well. They're getting their properties out and moving into rural areas, where there's more room because of the density. There's, so the demand for multifamily in high density areas maybe is tracking a little bit slower than it might have been in the past. And I know state tax laws also can have an impact on how that's going to play out as well. As an industry and as a company with asset preservation, we're seeing a lot of folks that are exchanging out into, I would say, tax-friendly, good business climate areas, such as Texas, Tennessee, Florida, Wyoming, where they're landlord-friendly and they're tax-friendly. So a lot of people are migrating from California going into outer areas, also because the cash flow is there as well. All right, so this is the trends that we're seeing. Now, to take you through the current challenges that are dealt with in a 1031 transaction. So what I'm going to just take you through what's important to know if you're in a current transaction right now and dealing with the 1031s. One of the biggest issues that I see is people fail to plan properly. When somebody is considering a 1031, so if you're out there thinking about selling your investment property, I think it's so important that you talk to your tax advisor prior to making the decision so you can plan, so you can determine whether you need to or should be able, should do a 1031. Once you have that determination that the 1031 will benefit you, then you need to plan the transaction, because there are limited times in completing the exchange. Just to refresh your memory, you have 45 calendar days from the date of closing to identify the property that you wish to, properties you wish to purchase. You have 180 calendar days to finish the exchange. Both of those time frames start at the same time. Now, to add to the mix, the tax code says you have 180 calendar days to complete the exchange or your tax filing date, whichever is earlier. So right now, if you're selling between October 17th and December 31st, so if you've closed during this window, we file our tax returns on April 15th, so therefore we wouldn't have the full 180 days unless there's an extension filed on that tax return. So you have to watch the time frames of all of this. Because of the limited market and the limited properties on the market, knowing where you're going to go when you decide to make an exchange, exploring those markets is going to be so important. Last-minute transactions are not easy to accomplish. I can pretty much judge a successful exchange to one that's not going to be successful if somebody is setting up an exchange 2 days before they're ready to close, because that means that they have done no research to determine where they want to go and what they want to buy. That 45 days goes by very, very quickly. I'm doing my own exchange. Believe me, it goes by very fast. All right, so plan properly. Another part of planning that's important is the tax ownership. When people are doing exchanges, it's not what's on title that determines who's doing the exchange. It's who's the tax owner. And there are more times than not in my world, we find out that the title is showing that it's in their individual names, but maybe somewhere along the ownership of that property, they moved it into an S Corp or a partnership. Well, that's the entity that's going to be doing the exchange. So be aware of who the tax ownership is and who's doing the exchange. You'll know that if you consult your tax advisor before you even start the process of doing an exchange. And remember, when you're doing an exchange, the same taxpayer selling has to be the same taxpayer purchasing. These are rules that come with the exchange, and they're not up for discussion. Identifying the replacement property in the 45 days. When I tell people that are entering into an exchange, I remind them, I said, look, keep your eye on the prize. The prize is going to be the deferral of the taxes. So the first 45 days is going to be the most difficult part of this entire exchange. And that is when you're trying to determine which properties you want to buy, where you want to buy, getting under contract, dealing with all these issues. I think when you're talking about planning, if people are out there making offers on properties very, very early on, you can help solve this identification issue, because now you're going through the process of making the offers, doing your inspections, getting your appraisals done and such. If that property's not going to work for you and you're still only at day 10, then you're going to forget about that property, you're going to move on to the next. But if you wait and wait and wait, and now you're getting close to the 45 days, you may just be throwing properties on that list, but they're either not available or you're not going to want to buy them. And here's the thing to remember. You can only buy what's on the list. Only buy what's on the list. Another thing that we're seeing is the financing aspects of it. Again, it's important to understand how long is it going to take me to get this transaction done. Lending has gone, especially on 1 to 4s, has definitely gone a lot slower because of the volume that's happening in the marketplace. So appraisers are taking a lot longer to get out there. Inspectors are taking a lot longer to get out there. So if you're thinking about, I've got to get the inspector, the appraisal has to go out, and you put yourself in, say, for example, a 30-day escrow, that may not be enough time. But you need to make sure that your lender can get it done if you've given only 30 days, because these things are taking a while. Now, another issue that does come up with the 1031s is, well, what can the exchange funds be used for? Very simple, to purchase the replacement property. Now, there's times where folks will go, well, what if I want exchange funds to pay the inspector, or pay for the appraiser, or pay the termite for the termite? Well, the problem with that is that's a cost of, deciding whether you're going to buy the property. Now, whether somebody like Amanda, or Matt will say that's a cost of the transaction, that's to be determined. But the qualified intermediary, I can't give the money to Joe Inspector. I can't give the money to, Tom the termite guy. I can't give the money to Alan the appraiser. Okay? Have reserves to pay for these items when you're out there purchasing, because there's times where you might be putting yourself into a property and you're going to find out that you're not going to buy it. You need to have these funds available, okay? And then the final thing will be improvement exchanges and reverse exchanges. Now, when you're talking about these types of exchanges, these exchanges, I like to say, are not for the weak of wallet. Because when you're talking about a reverse exchange, that means that you have to close on the purchase before you have closed on the sale. And I will tell you, with my soon to be 19 years experience in this industry, I would say 90% of the people that would like to do a reverse exchange are not able to, because there's financing involved and the lender will not allow us to go on title to the property. Now, I'll tell you what's not a reverse exchange. That is tying up a property before you have sold, which is totally acceptable, as long as your sale closes first and then your purchase closes. When we come to an improvement exchange, there are times where people say, well, I have some excess funds, maybe I want to make improvements to the property. The improvement exchange is the same as a reverse exchange when you're dealing with how we have to go on title to the property. Now, with the 100% immediate expense, maybe you don't need to do an improvement exchange, and we've seen some situations of that. Again, it all circles back to making sure that you're talking to your accountant before you make these decisions, understanding the time frames of the exchange, discussing what your plans are with whoever's advising you on buying the properties and such, and then have a good conversation with the qualified intermediary, because that way we're going to explain to you what you can expect. When it comes to an exchange, the guidelines and the terms and the times are very, very restrictive. But remember, the prize of deferring the tax is awesome. So, at this point, I think I'm done.